What's going on, guys? It's your girl Elise coming to you live from Unbroken Mindset. Before we get started, guys, go ahead and please like and subscribe to our YouTube channel. If you haven't already done so, please hit the like button. Go ahead and subscribe below. All right, coming to you today to give you this video on option trading. Just the beginning, just the small things here. What's a call? What's a put? Expiration, strike price, how you determine that. Give you a little bit of details about the theta, but about the Greeks, but not too much. Let's go ahead and jump right into it. Anyways, guys, so basically in layman's term, what a call and what a put is. A call is basically you're just saying that you're betting that that stock is going to go up. So right now you see McDonald's is on the screen right now, and McDonald's right now is sitting around $226.87. So if I said, hey, I think that McDonald's is going to get to $227, I would then initiate a call. If I said that I think that McDonald's is going to drop below the share price right now, which is it just moved, is sitting at 227.18. If I say I think it's going to go below that to just say 226 even or 226.5, I would then put a put in. So basically, I'm just saying that I think that McDonald's stock is going to go down. I know a lot of times people have a hard time trying to figure out how do you choose your strike price? How do you choose your expiration? All right. So first thing first, on Robinhood, I'm using Robinhood because Robinhood is user-friendly, right? Robinhood, for any beginners that's new to this or just get into stocks or just get into options, and you know you're feeling like this is all kind of overwhelming, you know, a lot of people will resort to Robinhood. I use it in the beginning. Sometimes I still look at it just to look at the Greeks or whatever, because it just looks so easier. It's a little bit more easier to navigate through that system. All right. So just say I wanted to get in this McDonald's stock right now, and I think it's going to go up, but I don't know what it's going to go up to. I don't know how I need to choose my strike price. All right. So right now, Robinhood has this tool where you're on the home screen of that stock. You'll see you have the day, and you have the week, you have the month, you have 3 months, you got your year, and you got your 5 years. So this is just basically telling you throughout the course of time what McDonald's stock has done. So just say right now today, McDonald's stock is down $7.76. In the past week, it's been down $8. In the past month, it's been down $4.42. So right now, McDonald's has kind of had a bearish trend. And that's just basically saying that, hey, you know, it's been a lot of selling off going on within this stock. So they've been on a bearish trend right now. So if you tried to choose a strike price for McDonald's, honestly, what I would tell you is the best thing that I would do is I would get the closest strike price to the at the money. And when I say at the money, I'm gonna show you. So you'll hit on your trade options, and this is how it look on the screen right here. So right now, McDonald's, I'm showing this is a buy, this is a sell, this is a call, and this is a put. Right. So if I'm buying this and I got it on a call, these are my expirations right here. And your expiration date, let's go ahead and stop right here for a second. With your expiration, you have some stocks where the expiration is a weekly contract. You have some of them that are monthly contracts. You also have some stocks that are like SPY, stock code SPY. It's like every 2 or 3 days that it expires. So you got to just keep that in mind. Me personally, I wouldn't recommend anybody that's brand new to this to do that and just try to use and purchase a strike price expiration date for like 2 days, because the way this market has been lately, it's been pretty bullish. It's been kind of on the uptrend, but some of these stocks like McDonald's, in a sense, it's been on the bearish trend. So if you're trying to purchase this stock, this option, make sure you put some time on it, and you got you some time on your contract. So if it goes against you, you got time to kind of make up on that stock, on that contract. All right. So what I was saying is, just say you're looking at McDonald's and you want to purchase a contract. Remember, I just showed you over the course of a month, McDonald's stock has been down. it's been down a lot. It's been pretty beat up. So if it was me, I wouldn't be looking at purchasing anything other than one of these right here, these at the money contracts. And when I say at the money contract, this is what I mean. This is what you call at the money. All right. Anything below that is already in the money because the share price is sitting right here. The share price right now, McDonald's is $226.89. It's moved a couple of times since we've been doing this video. But these are what you call in the money contracts. This is at the money. This is kind of at the money. And these are out of the money. So I wouldn't recommend going this far up on a contract because you're not going to make any money on that. So, and you obviously can tell why you wouldn't, because McDonald's stock has been kind of beat up a lot. So if I were to purchase a McDonald's stock, I would definitely purchase the $226.5 contract. And that it's not $1.86, because guys, when you're purchasing a contract, you got to understand you are purchasing a contract that is 100 shares within this contract. So right now you see $1.86. No, it's not $1.86. You're going to take that $1.86 and you're going to multiply it times 100. And that gives you $186. So that is what you're going to pay for this contract. All right. Get that. Let's go ahead and get that in your mind now. If you see something that says 10 cents, just know you're purchasing 100 of those shares within that contract. So that 10 cents times 100, that's $10. So that's what you're purchasing, and that's what you're doing. So you want to keep that in mind, and you want to just always know that, because sometimes as beginners, you see this $1.86 and you're thinking that's what you're paying, but that is not what you're paying for that contract. You're paying $186. All right. So choosing my expiration date. Like I said, choosing an expiration date can be kind of hard with McDonald's, and you see how it is, and you see that it's kind of sort of been going down trend lately. I would not purchase an expiration date of my contract that's going to be this week. If it was me, I would give myself some time, because if this contract doesn't get to $226.5 by July 23rd, then you've lost your money in this contract. I definitely would not do that. So if it was me, I always give myself at least 2 weeks, depending on the stock. And sometimes I give myself a month, depending on the stock. You can do leap contracts to where you're purchasing a contract longer out, and you can purchase that contract for a year out if you wanted to. See, look at these. Here's something right here that's July 20th of 2023. Of course, those contracts are going to be a lot more money because you're purchasing them out for a longer period of time, but you have so much security. And if McDonald's was a stock that I absolutely believed in, if McDonald's was a stock that I just, like their dividend, or I just love the stock itself, I would definitely be in on a leap contract to have it for a longer period of time. But, this right here is just for exercise purposes, just showing you, how to go in here and look at a contract, and we just so happen to be on McDonald's. I actually made a lot of money on McDonald's stock today on puts. I said that it was going to go down, and I think my contract paid me around like 200% today on this. But this right here is a dummy account that I'm playing with on Robinhood to kind of show you guys, how do you go in here and execute a contract? How do you go in here and buy it? What do you do? Because like I said, this is what I used in the very beginning on Robinhood, and I know a lot of people use it. So I'm in one of my dummy accounts, and I'm showing you how to do it. All right. So anyway, just say that you wanted to purchase this right here, right? You would go in here and you would click it. Now, a lot of this stuff right in here, it means a lot. This is the most important part of a contract, your Greeks. I will do a separate video on the Greeks. I'm not going to get into, everything about the Greeks right now on here, but the Greeks is the most important thing when you are looking at a contract. Yes, the strike price is important because you want to make sure you're getting the right strike price, making sure that you're able to, make money on that contract. But the Greeks is showing you how you're going to make money, where you're going to make your money at. Your delta and your gamma, those are important, and your time decay, which is your theta. That's the most important thing that's in this contract. So once you understand the Greeks, then you'll be able to determine all right, should this be a contract right here that I should even be purchasing anyway? Does it make sense to purchase this contract? And, you know, right now I'm already looking at your time decay of $26 is already going against you in the theta. So that's just something to be mindful about and think about. But like I said, I will do another video on the Greeks. We're not getting into that right now. So just say you wanted to purchase this contract. All you would do is just hit that plus sign that was just there right here. And then you would, and as you can see right now, it says that the buying power in this portfolio right here is $10. Of course, it's a dummy account. But if I had $200 or $185 in here, all I would do is just hit continue, and that's how I would purchase that contract. All right. If I wanted to do a put, and I said, hey, I thought that this was going to go down, and I said, hey, this is going to go down, then it's the exact opposite. You know, you would do the put there. Right here, if I say, hey, I think that McDonald's is going to go down to $225, I would click that one and I would hit this one right here. And that's what I would do. I would buy it. So, and like I said, that's just layman's terms. A call is just what you're saying that you think that the stock is going to go up, and a put, you're thinking that the stock is going to go down. Choosing your expiration date and choosing your strike price is important. And like I said, you can do that by just going in here and looking at what this stock has done over the course of time. All right. You don't know. This is your first time playing McDonald's and you don't know how to choose your strike price, right? You know, in the past week, it's been down $8. In past month, it's been down $4.64. So it lets you know that McDonald's stock is pretty beat up. All right. So like I said, if it was me and if I was purchasing anything or doing anything with McDonald's, I would purchase a contract that is the closest at the money contract that I can get, the closest to going into the money. And that was the $27.5 contract that we were looking at. And like I said, your strike price, always give yourself some time, because the way this market is unforgivable. You want to make sure you have some time on your contract. You want to make sure that you have time just in case it goes against you. And hey, you don't have to hold that contract. If that contract expires on the 30th, or the 23rd, or if it expires 3 months from now, you don't have to wait 3 months from now to sell that contract. You can sell it whenever you want to. And I do need to point this out, guys. Although you're purchasing a contract on McDonald's, if your McDonald's contract expires in 2 weeks, you do not own McDonald's past those 2 weeks. You don't own shares in the company. You own that contract for that allotted amount of time. So if that contract ends on July 30th, you're done with McDonald's after July 30th. You've made your money on it, whether it was a win or whether it was a loss. That's what you got from that contract. Now, when you purchase shares in the company, if you paid $226.68 for this contract, then that is not for a contract, but for that share, you own that. That is your share. But if you're going in to do options, you don't own that. You only own it for the amount of time that you have it. And a lot of people get confused on that. Oh, well, I bought this, and even if it expires, do it belong to me? No. Once it expires, it does not belong to you anymore. It just doesn't. But that's basically, you know, the beginning phase of option trading. You know, it's just, like I said, call is going to go, you're betting that the stock is going to go up, or put your betting that it's going to go down. And choosing your expiration and choosing your strike price is key. And this is how you do it. And this is how I go in, and this is how I look at doing it. If it's just something I'm looking at it, of course, if you want to get a little bit more technical, you know, you can look at your charts. I recommend TradingView if you don't have TradingView. Me and my team will also drop videos on good, you know, indicators to use and look at for beginners that's trying to learn how to chart. But yeah, use TradingView, and that's a little bit more technical. But if you're just trying to figure out how to do, how I would choose, and how the first thing that you do, and how do you go about choosing it, and that's what you do. You can go on here and you can look at things about the company, about their earnings and stuff like that. And wow, McDonald's have earnings that's coming up on the 28th. I did not know that. But that's a little bit more risky. That's another whole nother video, guys. All right, guys. So like I said, this is a video on option trading, how to purchase your options, how to purchase a call contract, how to purchase a put contract. How do you choose your expiration date? How do you choose your strike price? What is the Greeks? And like I said, I will shoot a video on that. And if you got any more questions, like I said, please feel free to leave us a comment. Please like and subscribe to this YouTube channel. Like and subscribe. Comment below what videos you want us to shoot. You want me to shoot another video on option trading to break down a little bit more details on it? Do it. Hey, say it. You want me to do a video on the Greeks? I'm doing it anyway, but please make a comment and let us know. We're going to go ahead and do that. And like I said, we're here, Unbroken Mindset. Like and subscribe to the channel, guys. And that's all I got. You guys have a good one.